All right, everyone, we're just going to wait a second here while we make sure that we're going live in LinkedIn and YouTube, Facebook business page, etc. And we are. So I'm Jason Beattie, your realtor with eXp Realty, because your move matters. And this is the Edmonton Market Minute. And so what we're trying to do here is bring in not only relevant local content to be able to provide information and help you out with your decision making, with how to take care of your home, when to buy a home, etc. But also we're going to update you regularly on what's going on in the market. And so today we have Sari Wild in from Flair Mortgage Group. And there's so much craziness going on, Sari. Well, first of all, thank you for coming in.
Thanks for having me.
And there is so much craziness going on. I thought, okay, you know what? We had to reach out and see what's going on because we have questions about rates. We see what's going on in the States. We see all kinds of outside influences. And so we're looking for a little wisdom. So thanks for joining us.
Absolutely.
What can you tell me?
I'll fill you in on all the stuff today. So first of all, really exciting news happened last week when the Bank of Canada decided not to increase their overnight rates for the first time in over a year. So after 8 consecutive increases, they're leaving it alone. So that's really nice, especially for any variable rate holders out there. It's really nice because you can sleep at night knowing your rate did not increase, your mortgage payment did not increase this month. So that's really, really good. One of the reasons that the Bank of Canada decided to put a pause to their increases is really because inflation is starting to slow. The housing market is slowing down a little bit more as well. Consumer spending has started to slow. And our economy is actually really strong right now, and our unemployment rates are good. So they decided just to take a break, see what the last 8 increases that we had. They're starting to really take effect here, and we're starting to see the changes come down. So inflation in January was at 5.9%. They have a goal to get it down to 2% still. So we could still see some increases in the upcoming future. But for now, it's kind of holding strong where we are. In terms of fixed rates, though, totally different story. In terms of, like you said, the U.S. market, there's been some major changes happening in the U.S. market over the last few days with the collapse of 2 of their major banking systems. So quite often we do mirror what the U.S. does in terms of rates and how things tie together. So our fixed rates are more closely tied to the bond market as opposed to the Bank of Canada overnight rate. So what that means is if the bond market drops, we'll likely see the fixed rate drop, or if it increases, it increases. So even this year alone, like we already have experienced where the fixed rates dropped at the beginning of the year. Over the last couple of weeks, they started going up again. And now because of the almost 30 basis point drop in the bond market in the US, we're going to see that the fixed rates are starting to decrease. I mean, even today, I've gotten a few emails from lenders just stating that the rates are already starting to drop a little bit. So that's nice to see. So we're more closely tied to the bond market in terms of those. So you can likely see fixed rates start to do that.
No, sorry. On that note, if we start talking about the fixed rate, and we're sort of shooting towards the 5-year rate, and we're starting to see some downward pressure. What kind of rate guarantees can you get on this? Because if a buyer says, okay, I like the idea of getting a rate guarantee now that we see some rates dropping, but I'm not going to move in for 3 months, 4 months. How does a rate guarantee work?
Absolutely. So what we do is we can do rate holds for up to 120 days. So if you were to put in a rate hold today with a broker, you would have it held until roughly July 12th, so mid-July. So that's quite a long time to start looking at properties and find the perfect home for yourself. If you get to the point where you still haven't found a property by the time that July expiration comes on your rate hold, then we would just submit for another rate hold at that time. So it's a really easy process. That's like our biggest recommendation right now is to really, because rates are changing so often, you should be talking to a broker if you're serious about buying or looking at buying in the near future, just because like holding till July is quite a long time. And it gives you that stability to know that you're locked in at that good rate that we're experiencing right now. And like things change, like we said. So we're expecting it to decrease now, but in the upcoming months, like it all ties back to inflation at the end of the day. And like I said, the government still wants to get inflation down to that 2%. So you could still see increases in the coming months. But for right now, we're trying to get those rate holds in while the rates are on the decrease for sure.
No, perfect. Now, what if somebody is scared though and says, hold it, why would I want to rate hold today if we're thinking that the American banking industry could have a little bit more of a collapse and therefore the bond market drops? Why would I want to rate guarantee today?
Great question. So, because we can always look at getting a reduced hold as well. So, usually when you submit a rate hold, a lender will allow you a one-time drop as well. So, if the rate does go down again, we can honor that as well, just depending on the lender that you go with. But keeping that in mind, we're always shopping around for our clients, and you're not committed to your rate hold either. Like, you're not committed, set in stone, you have to go with this lender. So if we find another rate that's lower somewhere else when it's time to move forward, we're more than happy to accommodate and get you in with somewhere else that might be a better fit for yourself. So
yeah, that's one of the benefits of dealing with a mortgage broker versus a bank, because a bank, number one, the bank has a fiduciary duty to their shareholders. So they have to maximize their dollar, but also they typically only have one set of rates that they post.
Definitely.
You have the ability to, on a regular basis, look, compare, and see if there's better alternatives out there.
Absolutely. And like, nothing wrong with banks, of course, they provide us a lot of solutions, but they can only offer, like you said, the products that they have. Whereas a broker could shop around for different products. Like, we have access to over 40 lenders that we work with, and we can shop around for the best product for you. And sometimes it's not always rates either. Sometimes it's about prepayment penalties or the ability to move your mortgage at some time. So there's always different solutions that we can look at. We do work with some of our main banks as well. And some of them have the best rates, but sometimes we can get them cheaper for you than what you can get when you walk into the bank as well. So it's always good to just get that second opinion and check with a broker, because it's our job is to work on behalf of the client and to make sure that they're getting the best product for them. Absolutely.
Yeah, our house is generally our biggest check that we're ever going to write.
Absolutely.
A lot of times, if we have to go in for surgery and going to go under the knife, we look for a second opinion.
Yep.
And so I'm continuously telling people, you may want to look for a second opinion when it comes to mortgages as well, because a $500,000, $600,000, $700,000 check is a big check to write.
Absolutely, it is. And we always want to make sure that you're taken care of and that you go into your new home with confidence, knowing that you can afford what you're looking for, knowing that you're going to be able to afford unexpected expenses that might come up. So these are all things that we look at when we do the application to make sure that you're set up for success and that you're gonna get the product at the end of the day that's going to make you the happiest. So
no, and that's perfect. And now also for anybody who's watching live, feel free to type in your comments, and we'll be able to ask Sari the question directly right here, real time.
Absolutely. More than happy to help.
And so, Sari, I apologize. I had interrupted you.
No, yeah, we covered it. We covered everything. Like, it does sound more complicated than it really is in terms of like how the rates work and how the structures are that they follow. But at the end of the day, like, it's super simple just to reach out to your broker, and they'll help you and guide you and teach you anything that you need to know as well. Like, we're not just here to make sure that you're covered for the purchase of your home. We can also make recommendations if it's something that you're looking to do in a year out, and what you might need to do to prepare to find that home. So we're here for the long haul and to make sure that people have confidence in their buying decisions.
Perfect. And actually, just before you popped on, I was on the phone with my son, and he's buying a brand new construction. He should be taking possession in October.
Amazing.
So what would you say to somebody who is looking at new construction, but they're well outside of that 120 days?
So with construction, we are able to get longer rate holds in place, so up to 180 days, which is really nice. So it's a lot better, but we can always keep doing rate holds until we're able to actually get them into their property. So that's always nice too. And then builders mortgages and things like that have different sets of rules and policies as well. So again, worth talking to a broker to see what's available to them, just because it is nice to have that peace of mind, and the rules do work a little bit differently when you're building a new property.
No, perfect. And I think we're seeing a little bit of a slowdown in the real estate market for the number of units that get sold. And so when a bank budgets a certain dollar that they plan on loaning out in a month, and all of a sudden they start to see a trend that that's not going to be successful, do they come out with some sales to try and get those dollars out?
That's a great question. I'm actually not entirely sure. Yeah, I'm not entirely sure. I would imagine that they do. But I always want to say, like, you need to do your research and on your T's and C's, I would say, just because sometimes when things are really flashy in front of you, it's not always the best option. There could be hidden fees, hidden costs, things like that. So yeah, I would definitely recommend to kind of do a little bit more research on that. And I can get back to you on that question as well as to what banks do for promotions on that.
Yeah, perfect. Okay, we'll chat about that in a future chat.
You
And
betcha.
yeah, and that's exactly it. So we've seen in the past there have been banks. I remember back BMO used to have this springtime seat, or not seat sale, but rate sale that would go on sort of January, February of the year. And the challenge is they were really punitive if you tried to get out. You
Okay,
had
yeah.
phenomenal percentage rate for your mortgage, but then if you ever tried to get out of it, it was a little ugly in the penalties. And so it's really important that you understand what you're getting into. I always say, so long as we know the rules of the game, then we're good. If we understand the rules of the game up front, I'll play any game. But I say, when I play Monopoly, there's always different rules. Sometimes free parking, there's money that goes in there and you get it if you land on free parking. Sometimes there isn't. And how does that money wind up in the middle? And so it was always different when you played with different people because the rules changed all the time. And if you didn't understand up front, it felt like, hey, that's not right. So same thing with the mortgage.
Yep, you betcha. That's correct.
Perfect. So why don't I quickly head into just the market and we'll cover a little bit what's going on there. All right. So these reports I do produce on a regular basis. So feel free. This is going to be all of Edmonton with condos and single family homes. But if there is a specific neighborhood that you're in and a specific type of home, I can create a whole report. It can be monthly, quarterly, annually, whatever you're looking for your neighborhood. But if we just look at Edmonton so far month to date, we've had 474 sold properties. Below, you're going to see the year-to-date totals. Now, keep in mind, though, this year-to-date in 2022 was for the entire month of March in 2022, and this is just the month so far. So it's sort of a gauge of how we're doing. I'd like to say, we're at 14th. We're close to halfway there. We would hope that we would be somewhere at the 50%. New listings, we've had a little over 1,000 new listings come to market. That is much closer to 2022's totals. So it's interesting as we start to see fewer properties sell and more listings come to market. Be careful because that could put downward pressure in pricing as well. We have the average selling price of $358,000. Last year, throughout the month of March, we're at $403,000. That doesn't mean that your property dropped by 25%. All that means is there's more people spending money on the lower end properties than there is on the upper end properties. Average asking price was $473,000. That's up a little from last year, the $421,000. And days on market. So this is important to understand. So these next two ratios are always, in my mind, important to look at and understand. So the average days on market right now for the month of March is 89 days on market. That's pretty huge because in 2022, the year-to-date total was 68 days on market. So homes are sitting around a little bit longer. Average asking to selling price, we're looking at 97%. So once again, that is a little lower than what we had in 2022 up till this time, or up till the end of March. It was almost 99% list to selling price. Meaning if your home was listed at $100,000, the average home was selling for $98,900. Okay, so very close. Where today, it's suggesting that if your home is listed at $100,000, you're selling somewhere about 3% less at $97,000. Then as we go through the monthly sale price, this is always fun to look at when you see the graph in your neighborhood, how the sale prices have shifted in your neighborhood. What we're seeing is basically, we have had some downward pricing pressure up until spring of this year. And then there's been a little bit of a bounce. We're back up to that 358. Now, also keep in mind, though, this is average selling price. So it just means that We have more of the lesser expensive homes selling. Now, one of the things that I really want you to look at, I want you to monitor this. If you're on the market or if you're thinking about coming on the market, it's something to think about, because the black lines are what happened last year. The blue lines are the ones that happened this year. So we see last February, there was downward pressure in the number of units that had sold in February compared to February of last year. We knew January, February was crazy, and it steamrolled into a strong March. Then in April, it started to slow down. Well, so far this year, we're only at about 25% of the entire sales volume of all March of last year. So this is something to keep in mind. Also, when I was speaking with Sari earlier, I'd mentioned the importance of understanding that there is an expectation of a certain amount of mortgages to be placed. There are builders that have an expectation that they're going to sell a certain number of homes. Well, if these numbers get skewed year over year, then there could be some opportunities out there. So if you're thinking about buying a home this year, between the downward pressure that's being created in the bond market in the States, which is forcing the longer term mortgage rates to come down a little bit, and the amount of inventory that's out there and the number of units that have sold compared to this time last year, there could be an opportunity right now. It could be one of those perfect storms for you to want to take action and make sure that you're creating a potential opportunity to be able to maximize your purchase power, being able to buy as much home as you possibly can or want, or make sure that you're getting the best value. So you're getting the biggest bang for the buck. So that's sort of my 2 cents on the market. Sari, thanks for coming in today. I appreciate your time.
Thank you for having me.
And if there are any questions, Sari, how do they find you?
You can reach out to me on Instagram at Sari Wild Whalen. If you could see my comments, I can put it in the comments. I can't see it. You're going to send out an email, right?
Yeah. Okay. So basically what we'll do, go ahead. We're going to come back and in the chats on the Facebook, LinkedIn, or YouTube profile, we'll put in Sari's contacts.
Perfect.
Reach out to her. She loves being on LinkedIn or on Instagram as well. So go ahead and check out her profile. And if you have any questions for either of us or for any other professionals in the market that you'd like to see in having discussions just like this, lawyers, home inspectors, etc., just let us know. We'd love to hear from you. If you like the content, like and subscribe to the channel. We'd be happy to get more of this information out to you, and we will see you next week. Thanks, Sari.
Thank you.